Hi, everybody. It's Jason Mefford. Hey, I'd like to do videos like this every so often just to answer some questions that people have posed to me about the CIA exam. So in this one, I'm going to go through and talk a little bit about some of the finance sections and also ISO 14001. So with ISO 14001, it is really about environmental management systems. And before I talk about that, let me just kind of share with you in general. Um, in the materials, the IIA refers to a lot of different standards, frameworks, other things like that. Now, for most of them, really all you need to know is kind of that number or that standard or law kind of applies to this particular area. So there's lots of them that are out there. ISO 19600 about compliance systems. They don't expect you to know everything about that standard, but just that's what that relates to. So ISO 14000 is one of those. They make reference to it when they're talking about environmental management systems. So, for example, if you were going to do an audit of the environmental management systems in your organization, you may use ISO 14001 as a guide for helping you in audit that particular area. Now, that's especially true if your organization is choosing to voluntarily follow that particular standard. So the first part, with ISO 14001, and really for most of the other ones, you just need to have a basic understanding of this particular standard relates to this kind of topic. Now, the ones where that's different is COSO internal audit, COSO internal control framework, the COSO enterprise risk management framework, ISO 31000 on risk management, and COBIT, which is really kind of around controls for IT. Those four particular documents you do need to understand better. And there's much more information in there about those particular things. So focus your attention on that. Don't end up going down a rabbit hole trying to spend a bunch of time on most of these other standards or laws or other things that they make reference to, because they're just making reference to it. There may be a question on it, but probably not. Okay, so that's the first part. Second part about finance. Got asked some different questions about finance. And so, again, I'm going to give you kind of a general answer because the reality is, like in my CIA course, we probably have at least 8 to 10 hours worth of video just about finance. But one thing that I'm going to do is I'll actually provide a link here. I do have a few sample videos, and one of them is on finance. It's about 40 minutes, and so you'll be able to get the link to that, so you can go out and learn a little bit more about finance. That I'm not going to re-record a 40-minute video for you right here. But let me just bring up a couple of the topics around finance that I was asked about, and also give you kind of a general rule of thumb. When the CIA exam started many years ago, there was a lot of information about finance on that. In fact, you almost had to be a CPA to understand some of the things. Now, over time, they have removed a lot of that information. But if you look at part 3 of the exam, probably half of the material in the books is about finance. So I don't want you to freak out about that right now, because finance is only 20% of that test. So even though in the materials it looks like 50%, you'll only have questions for about 20% that relates to finance. So that's the first thing is, even though there's a lot of information, there's a lot to know, realize that it's only going to be 20% of the questions. Now, some of the questions I've gotten around things like bonds, pensions, and leases. So let me give you some guidance there. Those are actually moderate to difficult finance issues and the ways that you would account for them. So it's actually difficult for people, even in school or that are CPAs, to understand and know everything about those. Chances are you're not going to have very many, if any, questions about those more complex parts of finance. So I wouldn't worry about spending a whole lot of time on those particular areas. Again, that was bonds, pensions, and leases. Now, some of the other areas around what's called PP&E, which is property, plant, and equipment. Effectively, let me just kind of give you the 1-minute version of that. So, as an organization buys assets, those assets end up getting used over a period of time. So, let's pretend that I buy a building that I'm going to either have an office or a factory in. Over time, the value of that building will decrease. And so we record the amount that we paid for the building. And over time, as we use up that building, we do a thing called depreciation. So each year we would depreciate that building, meaning a portion of that asset that we've invested in has been used up. And so that's where depreciation comes in when you're talking about property, plant, and equipment. There's different forms and ways that you can actually do depreciation. And so again, if that's more kind of what some of the questions are, let me know and we can talk a little bit more about depreciation in general. But again, that's a very broad category, and I can answer questions better the more specific that they actually are. The last topic area here about finance was around inventory management. Now, this is one of the areas that I'm just going to talk generally about. There are two types of accounting that you may do. There's accounting that is done for financial reporting, so for the actual annual reports, financial reporting. There's also what's called managerial accounting. How you account for inventory under both of those methods is different. So you have to keep clear in your mind when you're thinking about inventory and how you actually record inventory. Am I doing it for financial statement purposes? And if that's the case, there are certain rules about how you need to account for your inventory. And so they talk about LIFO, which is last in, first out. They also talk about FIFO, which is first in, first out. There's also some weighted average options. And that's because you have to account for inventory in your financial statements in a certain way. It has to be according to the rules of either International Financial Reporting Standards or in the US generally accepted accounting principles. So you would account for inventory differently there. Now, if you're looking at inventory for management reporting and for cost accounting, that is a management tool for you to actually be able to determine what your inventory is actually costing you. And so from a managerial accounting part, and that's the second part of finance in part 3, there are other ways that you would actually account for it. So your inventory on your management reports will probably differ in the amounts and the dollars than what are in your financial statements. So keep those two clear or separate, if you will. Under the managerial accounting, you're going to hear terms like activity-based costing, and that's again a way to try to capture all of the costs based on the activities that you're doing with that particular part of inventory. So anyway, I've gone about a little over 9 minutes already, so that helps answer some of the questions. If you have more specific questions about these areas, try to give me a more detailed question so that I can actually answer that in a more precise manner as well. So with that, I'm signing off for now, and good luck with your studying this week.